results from the Delivering Alpha quarterly stock report. 68% of investors surveyed saying that the sector with the most upside in 2022 is energy. That's followed by 58% who say healthcare, 34% saying financials. Joining us now to talk more about areas of opportunity, Mona Mahajan, senior investment strategist at Edward Jones. Let's just, before we get into individual sectors like that, Mona, let's talk overall just about macro and about recession fears and inflation worries. Yesterday, I actually coined, it might have been the day before, no, it was yesterday, quasi-transitory, because I'm not sure we need to throw that word out completely. I need to know, is this something that's now systemic, the secular, is it secular inflation that's here because of the Fed that got way out over its skis in terms of easing, or is it have to do with reopening and the supply chain issues, reopening after the pandemic? The Putin price hike, which President Biden says like every third sentence, does it have to do with things that could be quasi-transitory, or are we stuck with this for years to come?
Yeah, thanks, Joe. And look, what we've learned is, of course, this inflation has been stickier than anyone really expected. In fact, what we're seeing is really what the Fed can impact is not the headline part of this inflationary issue. You know, things like global commodity prices, oil, food prices, they're not really something that the Fed or global central banks tend to be able to impact directly. So what really the Fed is focused on, and we know their preferred metric is core PCE. And that's really where we think they can make an impact. Of course, raising rates aggressively can bring down the demand side of the equation. We're also looking at things like a potentially cooling housing market, a potentially slowing labor market, which will over time impact wage growth as well. And so in our view, our base case continues to be by year end, we'll start to see inflation, particularly on the core side, start to moderate, driven not only by tougher year-on-year comparisons, but also by what the Fed is doing. And keep in mind, markets are savvy here. We know the Fed's history. 11 of the last 14 cycles have ended in some sort of recessionary environment. And this cycle happens to be very aggressive, really unprecedented, 75 basis point rate hikes followed by 50s, hopefully followed by 25s. But in that backdrop, what we're seeing is markets starting to price in downturn rather than focused on really the inflationary concerns. And that's the backdrop we have to be in until we see that inflation moderate.